Hi, everyone. Welcome to a new series on Hash It Out, our podcast platform by Foundership. Today, we are going to kickstart the new series on investing in the next alpha Web3 startup. And in this series, we are super excited to bring one of our capital partners from our capital ecosystem, M55 Capital, the general partner, Khaled Mazus. A quick background about Foundership. We are a Web3 accelerator VC based out of Singapore, Dubai, and India. We work with Web3 startups across the world. Our portfolio consists of about 55 companies from 14 countries, with our top 10 valued at 332 million as of today. We enable startups with coaching, capital, and community, getting most of our startups ready for token launch. And this year, we are looking at least at 10 startups to get token launch ready. So today we are going to have a fantastic conversation with Khalid in understanding how they came about with their fund, what are the big theses, what are the big themes that they're looking at 2025, and most importantly, what are the key type of startups and founders that they look for before they invest and the next steps beyond that, right? So welcome, Khalid. Thank you so much for joining in as a guest speaker today on Hash It Out.
Thank you, Bimlesh, for the invitation, and a pleasure to join the podcast.
Fantastic. I know you're in the other side of the world, and we managed to find some time, between our schedules. So, absolute pleasure to have you as our first guest starting this series. I know we did meet briefly as you were one of our panel speakers at the XDC demo day during Token 2049 at Singapore last year. So, very excited to chat with you today. Why don't you give us a brief background about how did M55 come together? You've been in the venture investing space for quite some time. So talk to us a little bit about your background on how did you become a venture capital firm, GP, and we'll take it forward from there.
Okay. So once again, yeah, thank you for the invitation. So actually, it's a long track which brought me to investment, and I would say maybe it was like a bit of the randomness of approaching crypto when the job was still like shaping and the industry was still like in the newborn stage. So back in 20, actually, I used to be a lawyer back in France. And I was lawyer for specifically investment. So I did like some investment market in the banking. It was more about regulation. And then I moved to what we call distressed capital. So it's more like one type of private equity where we get back companies to put them back on track. In 2013, actually, I got a call from a friend. He told me, "Okay, have you ever heard about Bitcoin?" I was still in Paris at that time. Say no, what's that? And then he explained me everything. So it's like a Pokemon thing. You can trade it. It has value. You can speculate. You can do payment online. And I was like really just discovering. It was actually the first time I heard about Bitcoin. And once again, randomness of life. 2 days later, there was a Cyprus crisis where all the assets had been frozen for Russian people in the Cyprus island. And I heard in the news that they could escape and bypass the regulation by using Bitcoin. Then, of course, you understand that there's something which cannot be controlled by the regulation. Call my friend, and then he told me, "Okay, so the plan is we start an exchange." A few days later, I was in Hong Kong, and we launched we launched the first regulated crypto exchange in Hong Kong. So back in 2013. At that time, of course, there was no regulation, so you need to patchwork and handcraft like whatever legal qualification you can fit in to get the activity, match with the bank requirements, etc. And when we started, actually, it took us like quite a while, because I would say like 2013, 14, when we were talking about our job, we were still thinking that we're a payment processor. People were asking, and even for conference, of course, there was like already like some Bitcoin community everywhere, specifically in Asia, of course. But we're still considering ourselves as online payment processor. Then over time and with some bounce back of the price, we discovered that actually we were like a trading platform, purely trading, and then the new asset started to emerge. So it became like quite obvious that which industry we are fitting in. And then like I would say like from the investment side, for me, everything started back in 2015, 16. So 2014 there was the pre-sale for Ethereum for ETH. I think it was like August 2014. August 2015 we did the launch of Ethereum. At that time we were like maybe we reached like I mean we went over 100 million daily volume of trading, which now is
Nice.
not much, but back in the
Right.
days it was good. So we're like I think we're like in the top three in the world in terms of volume for if euro, if Singapore dollar, and if euro, Singapore dollar, and HKD, Hong Kong dollar. And that's actually where everything started. Ethereum, VRC20, everyone being able to launch a DAO. So soon later, 2016, we did the DAO, which got, we listed the DAO, which was actually a French founder as well from Singapore, which was like what we call the DAO, the first DAO on Ethereum, which got hacked soon after. And then you got the story with the fork of Ethereum and Ethereum Classic, which was a native chain. And then everything started from there with people starting to raise for project built on Ethereum. As we had the exchange, people come for the listing, and that's where we kind of saw the analogy. So my partner at the time was coming from traditional finance as well. We actually went to school together. Uh, and there was the equivalent of the underwriting. So people come before listing and access to retail liquidity. They have to sell in private. There was already that ecosystem of, I would say, unformalized or unregulated VC ecosystem, which has nothing to do with the one we have now. At the time, it was a lot of one-man show.
Right.
And behind this one-man show, a lot of syndicate pools. So some guys, which have been quite knowledgeable about crypto because they spent the last few years gathering people, gathering funds, making it a fund. And the fund at the time, it was what we call a fund was most of the time like one wallet and one single GP. No license, nothing, no bank account. Most of the time, no website. So ATG group, some friends, and the wallet. So that's how the allocation were splitted at the beginning in the earliest project. Then discovering that as an exchange, we do the underwriting. Then you discover that between the private sale and the listing, there's a lot of upside because the secondary market buying pressure is coming pretty hugely. The access to asset start to being more scarce and scarce over time. People fighting to get the allocation. The timeline as well for people raising, well, like getting shorter and shorter. I remember like maybe 2016 we did for example the ICO, and same for the retail. We did the ICO for First Blood after investing in private. I think it was like the first time we realized like how powerful the crypto retail could be. The ICO, it was something like I don't have the exact figure in mind, but something like 5 million raised in less than 2 minutes. And then you
Oh,
understand a really little supply of tokens, a lot of retail trying to find at that time people are still looking for the new Bitcoin, so trying to
right.
find the new Bitcoin, and then it made like things like that, like all the craze of ICO coming after. That's how I discover investment. So going for the underwriting, taking allocation for at the beginning, client of exchange, our friends, ourselves, pulling people which have been regular contributor to a pool. And from there, I started. So the exchange got hacked actually in 2016. Me, I was managing. I was general manager for Wall China, which was
Okay.
the biggest market in the days. And back in the days, like most of the industry was in China. Biggest exchange at that time, 2015, 16, 17. It was one exchange called BTCC, which was BTC China, known as BTC China overseas. which was the biggest exchange in the world. I mean, there was not even Binance in 2016. Binance came later in 2017. So yeah, so I mean, from there, so we got hacked. We got hacked. Like today's value should be something around like 1 billion USD.
Okay.
So from there, I decided that maybe it's like a bit too risky to get on operation, specifically like having people funds in custody, and specifically this kind of asset which worth like maybe like a dozen USD at the time of the hack, and which can go like 10x, which means like your debt is as well reevaluated 10x. So it's pretty tricky. And I moved to the investment side, less operation, maybe less exposure to risk, and then discovering the new risk related to investment side. Then I started the first fund called Scaling Venture, which was a fund dedicated to the big narrative back in the days, which was interoperability and scalability. Then we did like a dozen of deals, studied another one during the last cycle to come to this fund, which is M55. But there's maybe like a twist, which was like known for a decade, which was at one time our industry and traditional finance would merge. And it happens that earlier than expected, and we're
Right.
exactly in the middle. So the whole point of M55 is to build like an intelligible gateway for institutional and traditional finance to get exposure to crypto, and not to get exposure to assets that reflects part of the crypto industry, but like get exposure to real crypto assets, uh, tokens.
Amazing. So there's almost like a 10-year journey build up in reaching where you are right now in terms of moving from being an early Bitcoin, uh, investor to experiencing the benefits of it, and then setting up an exchange, and now setting up a fund. Fantastic journey over 10 years of seeing this whole industry and the ecosystem evolve.
Uh, yeah, I mean, the game is like totally different now,
Right,
and I would say like okay. I mean, I don't look down on anyone from back in the days, but I'm
right,
saying that for everyone and myself. So of course there are like some super bright mind and big brains back in the days that we met. I think us, and I think that was the biggest quality at that time to make it was just to be here. So you really literally just had to be here
right,
and be in space. You didn't need to be like it was not it was competitive, but the liquidity was not scarce and flooding the market like pretty quickly from time to time. That was the cycles. Uh, and what has changed? So I mean, for the B2C, it was a bit different for the exchange because there you need like you have like exactly identified competitors. For the rest of the market, it was I would say like pretty easy to make some nice cycles. But you have to evolve with the market. And maybe I would say like two things that I learned from that time is that like you're always getting obsolete by design. So whatever happened, I mean, can spend like 11 years in the industry. I would say now the biggest challenge for me and people surrounding me in M55 is like always reconsidering everything and specifically our understanding of the industry. You're
right.
fine. You've been in the industry since 2013. You are an OG. You are like a total veteran of the industry. Still, NFT gonna come. You're gonna look down on NFT thinking it's shit for kids, and then you miss the wave. TikTok tokens coming, same. Meme token coming. Okay, you're still old style, thinking you're gonna read a white paper. You're looking for the white paper. You understand it's shit, and there's no product behind the token. Okay, then you miss like 3 years of meme tokens. So that's the thing. You always need the humility and like a constant effort to reassess everything you think you know. Uh, that's the first point. And second point is that whatever you know, whatever like deep understanding you have about the tech, the market dynamic, the ecosystem, in the end, it's not about what you understand about the market. It's about how the market going to be perceived by the retail.
Right.
So whatever it is, it's not about you thinking. And we did. I used to invest in project. I love thinking they are building the future of the industry, the crypto industry, and of the financial industry, and even of the internet. And that was like maybe like the among the worst investment I did in my whole journey. So I think that like whatever we think or we think we understand, we're considering everything because you're always gonna miss a train. Number one, and number two is whatever we know. It's not about what we understand. It's about like how it's gonna be received.
Yeah, yeah, absolutely. So very important to kind of reassess, because this whole industry is also very fast moving, right? To understand what's going on, where the opportunity next is coming up in terms of investing and trying to get that multiplier as well. Talk to us a little bit
Yeah.
about, at M55, how are you looking at the industry in 2025? What are your core theses now as this year has dramatically also changed with greater commentary and potential regulations being eased up on the entire crypto industry from the US leading the way in easing out regulation. So what are a couple of things that you look at M55 right now?
And okay, I'm just gonna add one point for a previous question, and then I go on that
Sure,
one.
sure.
Is actually you mentioned at the beginning of the podcast that we met at Token 2049 in Singapore, and actually we met at the side event of Foundership. So it was a
Yes.
great event. I mean, I really appreciate the event. It was a great event. We met like a lot of people from the ground building. Uh, and actually, I was there with maybe you met him, Kyle, my MD. We've been working together for maybe 5 years. So he's MD of M55. Uh, and he came back like many times when we were at the side event saying, "How come your GP is here at the event?" Because like most people see GPs or funds as people not coming to side events, specifically in the afternoon, or staying in the VIP room and just having a quick tour in the main event. Thing is that if you disconnect yourself from the market, I mean, by design, we're designed to be obsolete by age. What I was saying about like you're gonna miss the train for whatever new narrative you're not surrounding well enough to see. And the thing is that if you're not surrounding yourself with cool kids, and I'm not talking about age, I'm talking about people who put their
Right.
hands in the engine and are building like solving friction, solving problems, identifying and solving problems, you're definitely going to be obsolete way faster than you think. So, the thing is that you need to go to these events, you need to feel the crowd, you need to talk to any level of entrepreneurs and see what they are facing. That's how you get that's how you can foresee what can happen in the market. And a lot of that is I don't know. I mean, and that's my point. Is you can't look down on anyone, and you can't. I mean, not look down on people, but you can't look down on the statement of anyone. I mean, anyone has a specific perspective of what is happening in the market, which once compounded and aggregated make like a relevant and a really sharp vision of what dynamic are moving on the market. Talking about like where is the market moving, who are the actors, who's emerging, who identifies some problem, which maybe now is a small project with like two guys talking on GitHub and who never met, but which maybe in 2 3 years could be like a narrative that will be chasing project to get exposure in.
Yeah.
So that was for the first question, and maybe the transition to that one. And so what we see for 2025, and that happened for each cycle, is that there are the things we can foresee, and we always leave a huge room for flexibility in the strategy, in the cash buffer, fully liquid to deploy, and in our, I would say, in our framework and and scope of how we assess the market, which is you need to leave room for something that's gonna emerge in the market, which can be new issues, new solutions, or even like new mechanism, but something new, unknown, and hard to understand emerging along the way. And it happened in each cycle. Where like what performed the best is the thing we can't even understand shit about at the beginning of a cycle.
Right.
And specifically in that environment, so you've been asking about the perspective for this year, including the regulation. Regulation has always been like one of the key points. So it's always about tech and regulation. If you could leverage these 2 points and merge the leverage, then you could make it in the industry. If you could understand these 2 points, then you could read and map the industry. I think that now, with all the uncertainty we have uh, in terms of regulation, in terms of tech, it's more about the use of the tech. I mean, the deep tech, apart from AI, we know what are the main challenges for the industry. So this one is like I would say a constant red line we can follow. Surrounding that, there's the regulation, and for the regulation now, we're in the era where like when everything was framed, it was pretty fine. If you go want to go equity or like pretty safe investment or specific jurisdiction like the US, yes, you look at the frame, you can foresee what's gonna happen. There's like so many statements from the SEC, FTC, whichever regulator, whichever jurisdiction, you know what to do. Everything else was considered experimental, but experimental, which means like there's no legal frame, which means like the buffer for creativity is like totally unlimited, and then everything we've been seeing on all the DeFi space. Now, the uncertainty was solved, I would say, like until the US election. Now, from the US election, we don't know. We know that Asia is tightening, but keeping like some specific area for the steam to vape out. Like typically, I'm talking about Singapore, Hong Kong. China can't do anything. Hong Kong can. Singapore is a second hub. Okay, Europe with like a big framework, which gonna allow a lot of old money to flow in, but on different assets. So now we're talking about like ETF, stablecoin, some equity deals, but we're still not talking about like what gonna cover what used to be crypto for 10 years. And last, and that's the big unknown. Now we have no more uncertainty. No more certainty is like what's happening in the US. So in the US, I would compare US to China, which is like okay, in US anything can be unregulated the following day. So we never know. From one day to another, everything can be unregulated. So any project, like the most experimental style, could be emerging from the US tomorrow. On the other side, we still got China, and in China, as you know, everything crypto is forbidden. So the fact that everything is allowed, I mean the how to say like the a legal framework where everything is allowed or everything is forbidden is basically the same. It's just like the way people approach, but like it's a catalysis for the same level of creativity and the
Right.
same room for creativity to expand. So in terms of regulation, now I would see like definitely more like we have like much more look in on the US and on US project. There used to be like this type of project that we call like the West Coast style, Silicon Valley style. You know, like all these projects at 1 billion valuation with a nice team, nice backers, etc. Trusted by US VC. Now I think we're gonna see more and more, and we're gonna see a bit of what used to be in Asia. You know, like a full range of project, not like some top super heavily funded and some lower projects who can't make it. But I think we'll see the full scope as we've been seeing in Asia for the last 10 years. And there's much more than the regulation, but maybe we can move on to the next question, or we can follow on that one.
Sure. Absolutely. Now, what are what is your view on the entire agentic AI landscape and how agentic AI in Web3 is going to play a critical role, and what are some of your themes that you're looking at?
And I think it's a bit like me. I would see AI more more as we were telling people they should see blockchain technology at the beginning, which is like, okay, it's not you like it or you don't like it. It's a tsunami coming, and you have to get on the way if you want to ride it. Maybe one important thing is that you see, like, I was talking about the fund we've been managing before, M55, and along all these 10 years, we've always been focusing, I mean, exclusively on the primary market, which means we buy before listing, we sell after listing. You know how shaky was the last cycle? Everyone was over
Right.
leveraged. We ended up with the last fund, we ended up with too much exposure in illiquid asset, which means you end up with your SAFT, which
Right.
worth whatever the one in front of you wants to pay you if you need liquidity. So from that time, we knew that like the way to go for this reason and for another reason, which is the asymmetry between the VC tokens. I mean, what has been called and renamed later VC token. So the asymmetry between the private and the public gonna be reduced over time for whichever reason. The asymmetry of knowledge, the technical threshold being lower, and the regulation. Uh, so from that time, we knew that like the only way to go would be to hedge our primary strategy by doing some liquid. Then we've been digging in the liquid for more than 2 years now, building up strategies. So at first, with the only ambition to cover 30% write-off in the primary of staff that will never be listed, or some team which don't make it, or even some team which just disappear, which happened as well a lot, and which will happen still for
Right.
for the coming years. And so you know you're gonna lose like 30% of your primary investment, gonna go to absolute zero. You have to cover that. That's how we study the liquid. Then we've been like developing some more aggressive strategy because of a philosophy we have or what we think we understand and foresee in the market, and we've been building some more the higher risk strategies, which started to be actually more profitable than the primary, which make us then reassessing what should be the standard of a primary. Okay, how many X expected a primary deal start to be interesting. Knowing that the liquid in 24 hours, you fully liquid, whatever happened in the market, you got your PNL. Every day, midnight, you got your PNL. You know you're safe and out of the market. And then along these 2 years, I would say since a year now, we started to implement AI. Not because we have like some specific taste for AI, but because you got like 1,000 strategies in mind and ideas and data to crunch. I mean, if you don't use AI, it's impossible to do, or you're gonna hire like 100 more staff. So I think AI is definitely the way to go, and it's not a choice or it's not a taste or a specific strategy. And not even a no-brainer. We don't have choice. We have to either we get 200 more traders, quant traders, than over funds. Either we did input some. I mean, we would input some AI. So that's what we did. So we use AI daily, and all the quant we are running are AI based. And same. I mean, as usual, is like once like some happy few had access to some technology,
Okay.
how come there's like so many algorithm on the market, AI based? Of course, it should go to the retail at one point. It will not be the best, but let's say you're a customer in retail, and it could be as simple as that. You need to do some DCA, and you discover Bitcoin in 2024. You want to buy some DCA and not some ETF. You want to hold your token. So DCA is a dollar cost average. You can do some improved DCA, but what you're gonna buy every Saturday morning, you check your portfolio and you buy 1,000 USD of Bitcoin, or you input some AI because you're gonna have some AI agent. You don't have the tech and you will never pass the technical friction to get to there. But there are a lot of knowledge on the market. The agent is the perfect gateway to circulate that knowledge. The agents are there. They can be monetized. They can be decentralized. they can be put on the marketplaces. The issuer and the developer can get and generate revenue and get their incentive based on that. And the retail can finally access like some tech, which in the end has always the ambition to be mainstream. And then the I don't know, like the newcomer in retail will get like his perfect fine-tuned DCA strategy without having to even connect more than connecting the API to the AI agent.
Nice. Any specific startups that you have recently researched bullish upon, or you have invested in the AI space?
In the AI space, we are following a few, but it's more about like enterprise solutions than
Okay.
retail dedicated project. Uh, so there are a few, but problem is that like we are coming from the crypto space. We are not coming from the machine learning space. So
Yeah, yeah,
it's already a bit
absolutely.
different.
Yeah.
We don't have like that deep knowledge. So the only thing we can see is, I mean, honestly speaking, I understand the basics, but I'm not coming from there. So I can understand the use and the benefit for us as a fund when we see something, or for a retail, because I've been in these shoes for a long time and I'm still retail in personal portfolio. Uh, so I can see the benefit. I cannot understand what's behind. So for me, I would say like the market is a bit like still a bit opaque in terms of
Okay.
technical threshold. Uh, and because of this opacity, and I don't trust much like people who put the ticket to just follow behind. What we go for now is mostly enterprise solutions, and then I think like I mean, in the short time we'll see what's really emerging within the AI agent, but you can see already like some dynamic that are like some kind of pattern for how to solve technical friction, which is like everything which is like middle layer. So we're talking just now, for the example of one AI engineer putting his algorithm on a marketplace. The marketplace is, I mean, what we call in a pattern a middle layer. So everything which is gonna be in anything which is aiming at offering access to the agent, and on the other side offering a market for this issuer of AI agents, I think is definitely one good way of inputting these AI agents. Then it goes like from all the scope. We're talking about the DCA. We're talking about can talk about like we've seen like some good stuff in security. We've seen some good stuff in DeFi automation, etc.
Got it. Well, what's your view
So I think this,
on what's happening on the real world asset side? Because for last two cycles, RWA has been one of the top themes, right? I got a bunch of startups really coming out from the RWA bandwagon. Where do you see RWA coming in and moving into this cycle as well?
um, I mean, there's one thing that all the funds and any investor like about RWA is the fact that behind the business of RWA, there's a real underlying business.
Right.
I mean, and we can go far in RWA. I mean, I consider myself that Deepin is one subsection of RWA.
Hmm.
One problem with that, that let's say we do a HPC center. We put some GPU in, and I tell you that we tokenize the GPU, we tokenize the computation power, and you can own that and get rewarded for that.
Right.
And whatever happened to the token, there will still be the underlying business which is profitable. Problem with that is that it works in certain situations. So in terms of narratives to raise from the private market, I mean the VC, the funds, it's gonna work as a narrative which is later sellable to the retail. Then when you put that in a market which is we are recovering from 2022, there was no substance behind the token, there's no real revenue. Of course, it's like really seducing. Then when you come to reality, it's a bit different. And the two biggest blockers, I would say, one is more structural, one is more contextual. First one, which is contextual, is that of course me, I'm super interested in that, and RWA in the wide sense, which is not only like a tangible product. We've been vetting and we've been investing as well in like some intangible product. So typical example is the IP, copyrights of music, etc. Problem with that is that you're quite seduced what in 2022 and you've been building quite a lot because of a liquidity crunch. Then for institutionals and for retail, if I tell you that, okay, now you can buy some RWA token or you can buy like some tokens of this GPU. So you're going to own part of the competition power and you can make 15% a year. It worked in 2022 for VC and for retail. But if I tell you now, okay, you want to make like a 15% doing crypto, or you want to go some meme, and maybe you can make okay, maybe you lose all, which is acceptable, or maybe you're gonna make like a 10k x 10,000x. Then that's harder to compete. So there's like this seasonality for when is the RWA really meaning something. Then there's the second point, which is I would take the example of what we call the rate, the real estate investment trust. So there
Right.
was all this narrative, which is the best asset, and we've been hearing that actually since 2016. People tokenizing your real estate,
Right.
which I think is really good. But in the end, you're gonna tokenize the real estate, okay? So basically, your rate. Then once the real estate tokenized, you got your product, you got something nice. People can. There's no more like a financial threshold from any amount people can get into real estate. There's no more like paperwork and administrative friction. Anyone, anywhere in the world can invest, buying the token, stake it, and there's like hustle-free way to get a yield from real estate. The problem is that for few people in crypto, it's quite seducing. Yeah? For people out of crypto, and
Right.
basically like people, what I call people out of crypto is all the liquidity which is needed now to get a nice cycle, and which gonna make what we call the super cycle. You tell them, okay, either you buy some shares in a rate and you just call your banker, or just call the rate and you subscribe some shares for 10k, finish. You send the paper, you do your bank transfer. You have nothing else to do. Then you will get your dividends and you will get your shares capital again. Or you get your 10k, you find a place to onboard a gateway, you need to do the on-ramp, get your 10k from USD to USDT. Then you need to buy the token, go there, stake it, vote in the DAO, etc. So the problem is that the idea is quite seducing. The reality is that the friction for the out of crypto liquidity to get onboarded for that way is lacking so much hustle-free experience, and is lacking so much trust. I mean, I go to a trade, I know they will never default, and if they default, I know they are like insured and I'm covered up to. If I go to your decentralized project, I mean, what happened to my wallet?
Right.
It's in the disclaimer. Whatever happened to my wallet, it's my own responsibility. So I would, even me as a crypto guy, I would still buy some shares of rate because it's like quite easier. So I think that's kind of like this, what we call the good bad ideas. And maybe the last point is that since a long time we've been talking about like a synthesization of assets. The whole point is not what we most people see in RWA, which is there's no threshold, anyone can invest, and then it's fully liquid, etc. It's fully liquid, but then you got the reality, which is technically it's fully liquid. You buy 10% of a building, you can sell it tomorrow without friction. You can sell it tomorrow if there's a secondary market. But as
Right.
everyone has been building a side, who gonna buy like your 10% of a villa in Estonia? No one, because there's no secondary market for that. So basically, you're gonna sell at discount. So the reality of the liquidity, not getting onboarded and not being here in secondary to make it liquid, make it like a a bad good idea. And then so my last point was like there's like this what we call since ever we used to call it the asset synthesization, which is okay. How about like a real rate, saying okay, my shares of fund of a rate are now tokenized. You can get it in your wallet in Coinbase. You can stake it and borrow money against that, or you can go on Aave, put it as collateral and borrow money. Then they got the underlying business which has been existing. They just plug in to get the access to what offers the crypto innovations.
Got it. Fantastic. How do you manage risks with these investments? Because several of these founders are global. Most of them have got their SAFT jurisdictions in one of these island nations. And you being in another part of the world where the fund operates, what are some of the risk red flags that you look out for before you commit an investment?
Um, that's definitely one thing about the. So you're more talking about not the risk, like in terms of market. You're more talking about the risk of like who are dealing with in the
Correct.
primary market. And I would say like you're asking about the journey and what I learned from the experience.
Hmm.
One thing we learn apart from security and everything we've been talking about is we got wrecked a lot and we lost a lot, and there's an infinite number of pitfalls along the way. So we got, and I got personally wrecked and scammed in every way possible, and I see all kind of innovation in that field, and I think this one is actually pretty our strength. And as I told you at the beginning, I used to practice as a lawyer back in France.
Right.
So I know what work the law is. That like if we're talking about SAFT, first thing is that SAFT is the instrument. So of course we need to, and if it's the best thing you have, you need to get it to as fine tuned as possible. Problem is that with the SAFT, first point is that okay, who doesn't? I mean, whoever doesn't have the asset and is unsolvable, whatever you can enforce, it's useless. Second thing is that you get market timing and you get litigation timing. Let's say you want to go to litigation. What does your asset worth? I mean, this is the story for FTX that we are seeing now. What does your asset worth at the time of settlement of the litigation? Maybe
Right.
not much. And another thing is what is the opportunity cost of the resources you put in litigation compared to the opportunity cost of missing the market when market is here. That's one first big thing. And second thing is, and I honestly don't know how the market gonna evolve in that way. But we're talking about SAFT, and just now, Bimlesh, you mentioned the how do we deal with like all these SAFT from entities which are set up in type of jurisdiction. That's where you have like to to get a bit more. And there's nothing complex actually. I would say it's like a basic due diligence. Is that when people put at stake a bit of liability, they always behave differently. But let's say like everyone which is set up in like some really exotic places, most of the time they would never put themselves as the one liable. It's gonna be limited responsibility. Most of the time they're gonna have like one director,
Right.
which is actually let's call it as it is, which is a straw man. So a straw man that you pay like 5K a year to be a
Right.
non-executive director, but on paper he's the one giving you the orders. Then you end up, and it happened for a lot of projects, they end up like being founders of a project, but officially they're executing what the directors they nominated themselves is giving them as instruction. So which means in terms of liability they're reduced back to zero and they're all covered. So I would say like the best way, definitely one big thing is that like and that both like for project in foundership as well, is that like going for network is the best thing, because if you got like if you got some how to say, some intuitive personal relation, and like if you got your, and I think it worth much more. I mean, most people don't care much about legal liability. What people care much about is reputation at stake. once you got a reputation risk, that's where which is most valuable. It's easy. It has always been easy in any cycle to scam 1 to 5 million with not doing much. What is hard is that if you want to be alive in the next cycle, so building the reputation worth much more
Right.
than whatever you can quick cash grab you can do, and in the long term, it will always pay more, always. And I mean, I'm talking from experience and from everything I've seen around. So I still have hope for this world and this industry to be one industry when the long-term good reputation pays always more than the quick shady cash grab.
Yeah.
And
Yeah.
so in terms of assessing is definitely, I mean, going for network, seeing who's vetting, doing our own due diligence. Then there's like it's easier and easier to see the red flags. But everyone is getting more creative. So once again, you can never consider yourself like risk-free or good at due diligence. So
Right.
we keep on being vigilant, and trying to improve best practices all the time. And in the
Nice.
South Indian, like that is that like most people don't enforce. So most important from VC side and from project side is that like as much as you can get intro, and if you can't get intro, it's fine as well. I mean, me, I'm okay, and I've always been okay to trust people that I just know from for a few time because there are things that you can feel,
Right.
and trust a lot of DD and maybe a lot or even more intuition and human feeling.
Got it. Fantastic. What's your fund size and what's your typical ticket size that you invest?
Uh, on primary, we used to be at a sweet spot of 250
Okay.
for many reasons, and for a lot of structural reasons. Is that I mean, first thing internally, we need to diversify, uh, regardless of how fun we can be of the project, the team, the idea, etc. So we need to diversify by design. Second thing is for liquidity issue, which is I think most of the constraint of this cycle is that the number of assets on the market and project coming on the market is exponentially increasing. Yeah. Problem is that the liquidity in front of that market, yes, it's growing. So we see the market cap of Bitcoin growing, but it's mainly all going to Bitcoin and top 10 market cap, and even lower, but definitely not going as we knew before with the same dimension going to new issued project, and which means by symmetry the liquidity available to get injected in new project, which make the secondary buying pressure that every early investor wants, is like reduced to something really thin compared to what we used to have. So sweet spot at 250. I don't think it's really reasonable to go over. And if it's something over, it should be on like a high valuation project,
Right.
which bring to the next constraint, which is like what do we think now about like a high valuation project? What do you think about like project valuated at a billion? I mean, where is the liquidity available to support that? And if the liquidity is not available, means you need to release the supply slowly in the market. But as we know, the market is uncertain, and the narrative is going to change faster and faster. So you know what you put at risk, and yeah, I think it's a sweet spot at which we should stay if we are talking about not yet issued token. If we are talking about OTC or brokerage on primary, then it can be higher.
Got it. And what's the size of your of M55 Capital fund?
Now we are reaching the 100 million,
100
and
million. Okay.
most of it is actually in liquid,
Okay.
because as I was saying, we are getting deeper and deeper in the liquid, which make the standard at which, for example, if you used to run with like some arbitrage strategy at 60% a year, that's your standard at which like you start looking at the primary. Now, like running with a big panel of alpha strategies, the the threshold at which we put the interest for primary market is like way higher, knowing that it has to be way higher not because of what we reach in liquid. And second thing, because there's always the alea of the primary, the alea of default or not being listed or not even being listed on time. So yeah, I mean, that's how we are balancing now. And as I was saying, like we've historically always been doing primary. So the goal for us is that I think we are going in that super cycle where the liquidity is pretty compressed on the top market cap. But I think we're gonna go in somewhere where we, and that's why we that's our job as a fund to find like what are the micro cycles within the cycles, and what are the lower market cap, and maybe to add on that, and we're talking about the 1 billion valuation project just before, is that you've seen all this narrative about the VC tokens, people going to the meme,
Right.
and I think that's something that may change in the next 12, 18 months.
Got it. Fantastic. Any top mentions of some investments that you have done in 2024?
2024 actually were like mostly OTC deals, so
OTC deals.
repurchasing a project that people got position in before.
Okay.
And that's the thing with master of a fund, is that every fund is under mandate of management mandate, which means they have like a deadline to get liquid. A lot of them have been starting during the last cycles. So there was all 2024. There was a nice cycle of project from 2022 being on the market. So now, depending on how it's going to be issued, but I cannot mention a project name, but I can mention like a vertical. So there are some RWA, which I think are more long-term perspective, because they may perform when the market slow down. Some deep in project, I was telling you, and I would say like in the main, we've been moving away a bit from GameFi. I think it's a
Okay.
long play game, but we still have exposure in GameFi ecosystem, including guilds, which I think will have a nice comeback when the GameFi vertical can kick off. But mainly because of risk management, we've been going to deep in and repurchasing soft in deep in.
Okay. Interesting. Any specific pointers you can share on, when a startup comes to you to pitch, what are some of the things that you look for, especially that will give you fantastic green signals to say that, okay, here is a founder, here is a team, here is a space that we like, and here are a few things that excites us, that you typically watch out for when someone is pitching to you.
Uh, I would say, and that's there's no like perfect profile of founders, but there are like
Uh-huh.
some common characteristic that we've seen is like
Right.
and specifically one, which is being as strong in the conviction as in the open mindedness and the ability to adapt. Which is like, okay, when you got and when you think you have the answer, you go fully in until you can deliver something to that answer. But if on the way to building that solution you see something happening or something emerging, you should not obstinate yourself in like going to that answer, I mean, or to the original solution, because, and that's what I think make like the best founders, is that your job is not building the solution you had in mind at the beginning, but building the solution to a problem you identify at the beginning,
Right.
whatever is the solution. Whatever is the
Absolutely.
solution. So typically it means like not being scared to move from one chain to another, not being scared from the way you should change to approach the problem, and maybe being radically different, which means as well like for business model, thinking like you are building something for retail when actually you are building something for enterprise solution, or maybe the other way around. Uh, uh, Typically, I can give you like a typical example because we are talking about liquid. I've seen some teams which were like building, and that was my first thought, which were building monitoring tool for on-chain, so clusterization and on-chain mapping, which allow them to get some alpha. But what you're gonna do with that? You're gonna build a SaaS or like a subscription-based product. It's fine, but how much you can make out of it? So how about maybe you make a DAO out of it? How about maybe you make a fund out of it and you start running it for your own profit? Then
Right.
later story will tell you can expand the product, but maybe keeping in mind as well. No one, I mean, whatever any VC say, no one like to fund research. And I mean, I know a lot of people which are like
Right.
doing their PhD in crypto for the last 10 years. So you can do your PhD in crypto for the last 10 years, but you will always need to find like a new blood to refill the cash flow. And some of them are genius. And I mean, when I talk about genius, I talk about like I really consider them like a crypto genius. Problem is that you cannot obstinate to what you see. You have to be obstinate, but what is the market waiting for? And maybe that's the second point is that like not being too selfish or or too convinced. You need to be not convinced about what you think the market should want, and to be convinced about what you think the market will accept as a solution to a problem. And once you understand the market, once you can put yourself in the shoes of the market, you can understand everything. And I think that's like maybe the best thing for founder wise. I mean, we're talking about like going to event to not become obsolete. The same thing. I
Right.
mean, level people are in the company from GP to MD. If there's some new stuff, new product in town, go there, put whatever, and start using the product. Don't look at the report. Go use the product, connect, use the wallet, understand the UI, understand what can happen in the mind of people using this product. If you stop doing that, you're dead. So as a founder and team, like building solutions, same. I mean, don't do like strict monitoring on a little panel of identified direct competitors. The market is wide, and most of people in the industry are here for profit.
Right.
So anything making profit is your competitor, and there's like, and we've seen in the space so many ways to bypass the problem. So always keep in mind that the your competitor is most probably not the one doing the same thing as you, but most probably something you're not even seeing coming yet,
Thinking of.
and
Yeah.
that you can put name on it. I mean, if
Got
you
it.
do the RWA, we're talking about your main competitor is the meme. I mean, what you're gonna do with your 15%? So it's not the other guy doing a real estate RWA or music right RWA. It's the other guy doing the meme, which is taking the liquidity from you. It's a battle for liquidity in the end.
Fantastic. Cool. Amazing, Khalid. I think we've covered quite a few ground. I just want to wrap up with a quick fire set of questions for you, just to get the other side of Khalid, for more people to know. What's your favorite book that you have read up recently?
Uh, okay, to be honest, I came in a period of my life when I don't read much, but I
Okay.
like
Or
reading. Uh, I like reading religious books,
sure.
whichever they are, because I've been educated like that, and I keep on reading a lot about what we call the Genesis in the old
Okay.
Bible from Jerusalem. So putting the religion apart, it's more about like this allegory about the pharaoh, which is you're oppressed by something higher than you, and you enslaved in that, and you need to unchain yourself and go to find your own route to your own land. That's one first thing, and thing I like in that, and I'm reading sometime, is because the big thing is that you always think the pharaoh and your master and you as a slave is someone else, but most of the time is actually yourself. And if we're talking about business, it's like something in you which is unchaining you. So you're in the end your own slave. So you have to always think that the one putting constraint on you is not something from the environment. It's maybe something to find in yourself or in your business model. That's one first thing. And there's So I'm reading that actually quite often because I keep on
Nice.
understanding more things. And there's this thing about so whichever religion people are can understand, which is you have to do the exode. So you go from to the promised land, you go from Egypt to the promised land. And thing is that on that way, and that's maybe a bit of a summary of our life in crypto until now. Actually, I'm still seeing people, still seeing people from traditional finance saying, "Okay, crypto is the next CDO CDS crisis coming soon." We never know. Maybe they're right, and maybe we've been right for 10 years, but we're gonna be wrong soon. So no one knows, and that's the thing to remember. And in that exod is so you got the people walking through the desert, not knowing where they are going, and not knowing if there is something at the end of the walk. So
Right.
I think it's a bit like that. I'm not gonna go into cheesy thing, but I think it's an important word for founders. I'm not telling you like some cheesy stuff. It's not about the destination. It's about the way. Of course, it's about the way because your whole life gonna be
Right.
like the conviction I was talking about, which is we don't know if there's something in the end. Yes, you need to edge yourself. No, you cannot be like full in, but you need like that faith in yourself as founder, in your team members, and that faith in that it's okay to scrap a project. So whichever way you have to go to the concept of destination, which is what you want to do in the industry or what you want to do with your life. So yeah, that was my answer
Cool.
to the book.
Yeah. What's your favorite food?
Favorite food? I eat. I got like a new diet now because actually because of the meme season, and I could not move too
Okay.
much from the desk. Which is I eat raw vegetables as they are. I
Raw
just get
vegetables.
them
Okay.
washed and like that. And the second
Nice.
thing is we're talking about like obsolescence of knowledge. Is we can do something about the obsolescence of knowledge. We can do anything about the obsolescence of body. So as pure food as I can.
Nice. What's your favorite holiday destination?
Favorite holiday destination? I would say okay, maybe it's not a place, but I would say some places where I know what either I go alone, but now I have a family, so life is different. I go alone
Right.
and I get lost, but I get lost in the real crowd, not in the tourist crowd. And
Okay.
second thing is that in the magic of daily life, like looking, and I used to before, because you always imagine what's on the other side. So I mean, who are all these people like sitting at a table? I'm from Paris, so sitting at a table on terrace and seeing people and imagining what's their daily life. So more like that. But I would say anything which shake me a bit. I'm not specifically nature or specific destination, but that's it. And if not the beach, because we don't see it enough, because we spend our lives in front of these
Right.
screens.
Right. Yeah. Fantastic. Well, who are a couple of people in your life that have inspired you the most?
You mean in crypto or in general?
In general, it could be business
Yeah.
people, personalities, family. You could name one, two, three people that you think have inspired you the most.
And I would say more like a concept of people, but okay, I can give some examples. I got like one guy here surrounding me, which is who came to Asia like with straightly nothing, yeah, and he's doing massage, like an osteopath, which is not
Okay.
medical profession recognized everywhere. But I admire in is the way he's been leveraging the little he has. And I think same for all the cohort of founders in the foundership is it's not about like I mean whichever position you are, if you're at 1 billion and you make 15% a year, okay, congrats, but the performance is not there. But if you have some little and out of that nothing, you could make something and leverage anything you have and being creative in the way you have. I mean that's one thing I admire the most. So I would mentioning that guy, but it's like I don't know when I'm thinking, or I'm disappointed, or I'm getting a bit lazy, or a bit too comfortable with what we are doing now. I mean, I look at people around me. I mean, I've been living in Asia for a while, and India, China is the same. It's a bit like a kind of free market where a lot of people need to just survive and just being creative with whatever they have. And when you see like these people in the street, I give the example in China. Every time, and I think you have the same in India. Every time it's raining, in the next 5 minutes, you got like some old woman, like a retired, like around 60 years old, which have been running to a supermarket to buy a batch of umbrellas and are waiting at the exit of the subway station to send you the umbrella 2x. She's the one making the 2x. How about the fund manager making the 15% a year? They're not making this 2x. This kind of like creative and creative people who are able to leverage and sniff whatever opportunity there is.
Got it. Fantastic. Amazing, Khalid. Thank you so much for your time today. It's been a pleasure talking to you and understanding more about you and what you guys do at M55 Capital. I'm sure this conversation will lead to a lot of understanding for startup founders to when they have to reach out to VC firms like you to raise capital and what to look forward and how to position themselves. Thank you so much once again for your time today. And we wrap this up today, listeners. So do follow Foundership on YouTube, Spotify, and on Twitter. You can visit our websites for our ongoing accelerator programs, especially if you're getting ready for token launch in next 90, 120 days. Do check out our programs. We continuously run Get Token Launch Ready to help you launch your tokens. And look forward to the next episode with another very interesting capital partner from the Foundership ecosystem. Until then, take care and see you soon. Thank you.